Options live trading room and has one of the most successful options alert services in the industry. His calm and confident demeanor lends to a trading environment that is stress-free. Ladies and gentlemen, here to present my top strategy to trade earnings report is Mr. David Wise of Right Line Trading. Welcome back to Traders Corner, David.
Thank you very much. Appreciate you having me on here. Last one of the day.
Yeah,
thanks very much. I know it's probably been a long day for everybody. Great presenters here. I've heard Oscar a few times, and I'm always entertained. Yeah, my name is Dave. I'm with the Compass. I have a Compass Options live trading room and an alert service where we trade. Most of our trades are fairly quick trades. We have intraday trades, and we do some short-term swing trades. And I'm going to go over the methodology we use. I'm also going to go over the alert service, some of our results that we've had, and I'm also going to spend some time in here. I like to do some basically some free education each time I do a webinar. Today we're going to focus on time spreads. So once we get through the first part of the presentations, we're going to talk about time spreads, which is what I use to do trades, to do earnings, trade over earnings. It's the only methodology I trade over earnings. It's a non-directional trade, and it's been very successful. So we'll go over the details for that, especially we've got earnings season coming up in a couple of weeks here. So I think this is a good time to share this particular strategy with everybody. So again, good afternoon or good evening, or whatever time frame you're in. And again, my name is Dave, and I'm with the Compass Options Trading Room. So let me first get the usual disclaimer out of the way. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose, and neither myself or Right Line Trading are licensed financial advisors. Okay, we'll get that out of the way. And if you have any questions, you can put them in the question box. I'll try to answer them as the presentation goes on. If you have to leave or something I can't answer, if you put your name and number in the chat box or your Skype username, Rory from Right Line will follow up with you to answer any questions that we can't get to or I can't answer. All right, and again, I appreciate everybody being here right now. One of the things we're going to talk about today is a system I use. It's a piece of software that runs on both Thinkorswim and NVIDIA and Ninja, and it's called the Compass system. And this is just basically some graphics of what it looks like. I'll go over it in detail. The key on this Compass system, what it does is it tracks institutional involvement in trades. We find out if an institution is moving a trade or not. We take them if it is, and we skip it if it is not. All right, and this is just a graphic of what the alert service looks like. You send out SMS alerts right to your phone. We take only the very highest probability trade setups. When we find them, we send them out. It'll go to your phone probably in about 30 seconds or less, and I'll go over the details of exactly how that particular service works. All right, so before I get into it, into the presentation too much, I want to go over something that I talk about at every webinar I do, and that is to try to understand what is moving the market, what moves the market. It's really important, because if you know what moves the market and you can identify it, you can identify those that are moving a market. When they are, you can follow them, and that's really the key here. This is basically just a graphic representation. These little marbles here, these are retail traders, such as myself, and I suspect most everybody else in the room is a retail trader. We have no ability to move the market. We can't create trends, we can't reverse trends. There's really just nothing we can do to move the market at all. And if we're in trades, and the institutions, which we're going to talk about in a minute, is this big ball back here, then all you're going to get is you're going to get a lot of chop, you're going to get a lot of chaos, and it's very difficult to make money. Keep something in mind, and that is we as retail traders take our profits, take our money from other retail traders. We don't take them from the institutions. We're taking them from retail traders who don't have as much information as we do, and the tools that we have here in the Compass system and in the room I've got, I feel like we've got bazookas. Other retail traders are in there with pop guns because they don't have the information we have. So this is what moves markets. This is the institutions. Institutions are investment banks, Goldman Sachs, JP Morgan, Morgan Stanley, on and on. And Also, hedge funds, hundreds and hundreds of hedge funds. They have billions and trillions of dollars to trade and invest. And you also have to add to that pension funds, big pension funds. And you also have to put in there mutual funds, T. Rowe Price, Vanguard, all those big mutual funds. They all have billions of dollars to trade as well and invest. And it's important for us to figure out when they are pushing a trade and when they're not in there. And we as retail traders will make money by following the institutions. And the institutions, by the way, are made up of desks. They have manual traders, but they have mostly computer systems, which are called algos. And algos do a majority of the trading in the market, probably 80% or more. And it's important for us to know when they're in there and when they're not. All right, so that gives us a little background on what moves the market and what we're looking for to become a consistently profitable trader. In the room, I've got a couple of rules that we trade by. Pretty simple. We trade the best and skip the rest, which means we're just looking for the very best high probability trade setups that there are. We're not going to try to take any kind of trades that are mediocre trades. We're looking for just the very best trades. So we trade the best and skip the rest. And another rule is our objective is not to make trades. Our objective is to make money. And this is important because a lot of retail traders feel like if they're trading and they're in front of their computer, they need to be in a trade all the time. They need to be trading all the time. And that's probably the worst thing you can do. We only want to trade when the trades are high probability and we can make money on them. Otherwise, we have to be patient and just wait for the trades to come to us. All right, so those are our rules. Now, to become a profitable trader or to be a profitable trader, you need an edge over other retail traders. And the edge we have here is we have our compass system, which I'm going to talk about, which tells us whether the institutions are in there or not. We only trade stocks that have relative strength or relative weakness. This doesn't mean RSI. Relative strength and relative weakness is how is the trade stock that you're looking at trading versus the S&P 500 or the SPY or the Qs. If the Qs or the SPY is moving sideways and down and your stock is moving up consistently on a 5-minute chart, it's got relative strength. So it gives you it increases your edge if you're trading a stock long with relative strength and short with relative weakness. Because if the market turns on you, your stock is not going to perform as badly as the SPY is, so it'll save you some money. It'll get you out at a profit or a very small loss, even if it reverses hard, because the stock won't reverse as much as the SPY does. We want to trade with the market trend if there is a market trend. A lot of times there isn't. There was no trend today, yesterday, just chopping around. And we also want to buy near support and sell near resistance. In other words, don't chase stocks when they take off and start running high. You suffer from FOMO, a fear of missing out, and you don't want to do that. You want to wait for the stock to come back to a support level or up to a resistance level, reverse back into the original trend, and then go ahead and join the trade there. All right, so that's important. And how does this compass system help us here? What it does is it identifies the highest probability trade setups while sidestepping the setups that look good but will fail more often than they succeed. And we do this by identifying when institutions are driving a trade and when they're not. This is come back to what drives the market. Institutions drive the market. The compass system is going to analyze. It analyzes complex trading data and displays the results in an easily identifiable visual format. And we'll go over a bunch of these so you can see what they look like. But it's this visual element makes it possible for even new traders to be able to identify whether you've got a high probability trade that's bullish, high probability trade that's bearish, or a neutral trade that you don't want to be in. It really simplifies getting started in the business and not having to dig into a lot of technical analysis to find these things. I mean, I do a lot of technical analysis, but when you're first getting started, it takes a long time to learn that. All right, so that's how we get an edge over retail traders. We only take trades that are being driven by institutions, and I'm reiterating this because this is really important. Trading stocks that have relative strength or relative weakness and trading in the direction of the overall market. These things right here will set you up with a likelihood of having about an 80% win rate without digging into it any deeper. Because our trades will be supported by institutional buying or selling. The stocks will be outperforming the SPY, and they're going to be moving in the direction of the overall market. Very important. All right, so this is what we look for in the room. This is where my trades come from, and we'll show you how that's done. Okay, so I want to just take a quick look at least recent price action. And the reason I want to do this, is I want to show you the compass system on a daily chart. This is the compass system on Thinkorswim right here. This is a SPY on the daily chart. This is a daily chart. This is what the compass system looks like. This is some of the scanners we've got built into the compass system that come with the software. But let me move that out of the way. What I want to show you is I want to go back to November when the market switched. The market turned up in November, right here. And if you look at the compass system here, these indicators, let me just go over them quickly. We'll go over them again later. But the main ones, the most important one is this is the multi-time frame momentum. This is the current time frame momentum. So this is telling us what the momentum is on the daily chart. This is on the 1 day, 3 day, and 9 day. This is the long-term trend, and this is a derivation of money flow. All of these that are green or blue, it's bullish when they're lined up. When they're red or yellow, they're bearish. When you've got a bunch of mixed colors, they're neutral. But you can see here that the market turned right here around 11:20. Everything went green. The compass system is telling us everything is green. We want to be trading in the long direction, even if we're just intraday trading. And you notice how long that the compass system tells us that the market is staying green. All the way here from November 20th, all the way out to here to the end, through the end of December. And it was telling us to stay long the market. And then we started getting yellow here. This is when the market started to fade off. So we had green up here, but yellow here. And then we're starting to getting these mixed colors. So this tells you not to take any long-term trades here. You can still intraday trade, but you shouldn't be swinging trading very much. And then we went back to some green again in 1st of January. Again, see how easy the compass system is to see, telling you what the market's doing. Bullish market, still bullish, even though we get some hesitation here, still bullish. And all the way until we start getting a bunch of this red. Now notice in the SPY, this was a really key candle right here. This was on April 4th. This was a bearish engulfing candle, a really huge candle compared to the other size. That was a warning sign that things were changing, and the compass system picked it up immediately. And then it's even though the market was going sideways, you notice we stayed green, yellow, and red here, telling us that there's trouble ahead, and that's exactly what happened. Now you could be shorting here, but you have to be careful because we're in a bull market. But you can short down to some support level. That's what we did. And again, now you can see how choppy this is. Really choppy trading. So this kind of just shows you over time, the compass system is back to green again here. Right back on the 5th of June, we went long, and you notice that we had blue and green across the board. Market popped up, and up it went. So this is what you see on the daily chart. You get the same information on a 5-minute chart, but it makes it very clear and very easy to understand what the market is doing, in which direction you should be trading in. Okay, so that's our recent price action. I want to go over kind of quickly the basic high probability trade set, what I call a setup funnel. And this is what I teach and what everybody in the room uses to find a trade. How many of these check marks does that stock meet? In other words, how many of these criteria work for it? So what I do is I talk about five different things here. The daily and 5-minute chart need to align. When you're getting into a trade, the daily chart should be bullish if you're going long and bearish if you're going short. Don't be taking a trade short if the daily chart is bullish. That's important. So I always look for the daily and 5-minute chart to align. I want to trade with the trend, both the stock and market trend, if there is one. If there's not, then I can avoid this one or negate this one. But the compass indicators have to align. I cannot take a trade if I don't feel like the institutions are in there. The compass system has to be telling me that the institutions are in there buying or selling. If I'm going to go short, they need to be selling. If I'm going to go long, they need to go buying. If I'm going to go long, they need to be buying. So this and this are critical. Then we want relative strength and relative weakness. Now, this can come and go during the day. And if you like a stock long, what you really want to do is wait for the time during the day when that stock now has relative weakness to the SPY, or relative strength if you're going long. So that's another checkbox. So you want this one, 5-minute and daily chart lined up. You want the compass indicators to tell you the institutions are in there. You want relative strength and relative weakness, and then you want to enter near support or resistance. If the stock meets these criteria and drops out the bottom, you've got a really high probability trade that you can then take a look at some more additional indicators to find out some more technical analysis to see if it's the best. But this eliminates most of those trades that you'll be looking at during the day. All right, so again, this is just a recap of the funnel method. I put in green the most important ones. The stock to be traded should have a daily and 5-minute chart aligned. The compass indicators must align in the direction of the trade. And you do want to have relative strength or relative weakness. And a couple of small things here if you're trading intraday, the stock price should be above the VWAP. If you don't know what the VWAP is, I'll show you for long and below the VWAP for short. And the key thing I try to teach in the room every day is to have patience. Wait for these stocks to come to you and pick only the best. That's what you don't need to be trading 10 trades a day. If you can have 2 or 3 good trades a day, you're in good shape if you're taking the very best. Okay. So inside the room and on the alert service that I have, this is typically what we're going to be taking. A lot of straight calls and puts. If you like straight calls and puts, we do a lot of straight calls and puts. Typically, they're going to be anywhere from 3 weeks out to 2 months out at max, and we don't usually keep them that long. Now, they also could be intraday trades, but I still go out in time on the calls and puts to protect against too much time decay. We also do debit spreads using weekly options expiration. This is kind of an unusual one. Most people use debit spreads, but they don't use weekly expirations on the current week. I always use the current week. I had one today on Amazon, I think, and had a nice trade in that for about a 30% gain. Time spreads, which is the one I'm going to go over here today. This time spreads we use over earnings. It's also called the calendar spread, and this is a non-directional trade that we're capturing what's called a volatility crush, which I'll explain when earnings come out on a stock. And then I have another one called the weekly ATM strategy, which is where we sell puts every week against a longer dated long put out 2 months in time or so. So we can keep selling puts against that stock every single week and bring in a lot of premium. I've got one on Google right now. We're getting ready to take final profits on it. It's been extremely profitable. And then I do credit spreads also to capture premium over a few weeks. You may be familiar with credit spreads, but the strategies that you use, it's really important to structure them to the market. If you've got a bullish market, certain strategies work. A bearish market, certain strategies work. And if you've got a neutral or choppy market, there's other strategies that work. You've got to use the proper strategy for the proper market setup. And again, we do credit spreads. And then I also have a intraday type trade called the SPY Super System. This is when we trade the SPY or the Q, either long or short. When we have the institutions in buying it or selling it, it's coming off a support or resistance level. The market internals are also bullish or bearish to correspond with the compass system. Then I can take a trade, but most of these only last for 3, 4, or 5 candles or so. So that's what we get in the room. This is what we send out on alerts. You won't get the SPY Super System on alerts because it's too quick. All right, so those are the strategies we use. All right, let me see if I got any questions. Get down here. Bottom of slides are cut off. I hope not, though. All right, so the alert service, I want to just go over what the alert service is designed for. It's designed, obviously, for day trades and short-term swing trades. It's not an investment service. It's day trades and short-term swings. It's designed for traders who can't watch the market all day or don't want to watch the market all day. They just want to make some trades. These will be real-time alerts on the highest probability trade setups. And again, we find the highest probability trade setups by identifying institutional involvement, market internals, and by doing technical analysis. And that's the process I go through to find the trades to take. This is just I need to update this. This is from last fall. Just a typical, this is a 90-day cumulative P&L showing $2,000 invested in each trade. So what I'm going to do here is I'm going to run through some of the results for some of the trades we've taken in the last 10 months or so. I'm not going to go over every one. The key thing here I want to show is I want to highlight what you can expect for returns on the trades that we take. I don't want people to think that I'm one of these services where they'll send you an email and say you're going to get 500%, you're going to get 1,000%. that's nonsense. You can't do it consistently. So this is typically what we see, and this is in September of 2023. Again, we had 25 wins and 2 losses for 92% win rate, pretty high win rate. I just use a base. If you invested 2,000 in each trade, it created a profit of 77.88. This is just an arbitrary number, just so I have something to compare it against month to month. But again, you can see the trades 23% up, 43% up, only 5% up, 108% here on STX, 31% in Oracle. But you can see what the percentages are. We had a couple of losses. We do have losses. If you don't have, if people tell you they don't have losses, they're lying to you. Here's October, and again, I don't want to dwell on it too much. I just want you to see the percentage gains, how it stays in the same ballpark all the time. 29, 23, 33, 43, 28, 17. This is what you'll see. And again, you get a few losses. And here's a couple of time spreads that we're going to go over here in a little bit. But in October, we had 24 wins and 4 losses, 86% win rate, 2,000 invested in each trade, produced 44.80 in profits. And a lot of the profitability, by the way, is dependent upon the market itself. If the market is trending, you can stay in trades longer, you can take bigger profits. November trades here, again, we had 21 wins, 4 losses, 84% win rate. So we had a lower win rate, but we actually netted more money, and that was because we were able to stay in some of the trades longer. But again, you can see here the percentage wins that we've got, what we're getting out of these trades. We only had 8 in Goldman Sachs here, but we do some put credit spreads. But you can see it's 20, 30, 40% fairly frequently on these trades. December, very short month for us. I didn't trade a lot in December with all the holidays and stuff, but still had an 87.5% win rate. And I'll just sail through these. It's January. Again, nice wins here, 20 wins, 2 losses, 90% win rate, 75.05. Had some nice wins. We had Mara for 65. This was a crypto stock. Workday for 26%. Boeing we had for 96%. So pretty nice wins here in January. February was a really, really good month. 92% win rate, 24 wins, 2 losses. I broke out the alerted service starting in February so I could show folks who are on the alert service, because you don't get as many alerts as call-outs as you get in the room. But the alert service was 20 and 2, 6,900 up, and 24 and 2, 92% win rate, 11,745. A really good month in February. All right, so I just want to recap the results here, and then we'll be done with talking about the results. I do want you to understand that we have a really high win rate and we make good money, and I want to go over how we do that. If you had in 2023, if you invested 2,000 in each trade, taken in the Compass options room, it produced a profit of $60,208. So if you started with a $50,000 account, this is completely arbitrary. You would have a 4%. You would have used 4% of your account balance when you first made your trades, and the account grew by 120%. And at the end of the year, it would have been at 110,000. So your trades at the end of the year, if you're still putting 2,000 into trade, that was you would have been using 2% of your final account balance. So that was 2023. This was the first quarter of 2024. Again, you can see the consistency here: 86% win rate in the trading room, 87% win rate in the alert service. The first quarter, the trading room was up 18,000, a little over 18,000. The room was up 12,000. This corresponds to about 70,000 a year, which is close to the 60,000 we did last year. This is the second quarter. I just put these numbers together. We haven't really, I've still got a couple of trades off in June that haven't come off yet, but we had 65 wins and 14 losses, 83% win rate, 14,842. Alert service, 35 wins, 6 losses, 85% win rate, 11,784. Right, so this is just the first and second quarter of this year, very comparable to last year. It doesn't change a lot from year to year. The win rate stays very, very consistent over time. Now in May trades, I'm going to show the May and June, and the reason I wanted to do this is I wanted to highlight what we're going to be talking about here in a minute, which is time spreads. So these were the May trades that we took, and you notice we had 1, 2, 3, 4, 5, 6, 7, 8 time spreads, and we had 7 wins out of those 8 time spreads, and some pretty nice wins here: 71%, 50% here, 40% here. 38% and 60%. So we had some nice wins. These were trades on earnings. So we don't do as many once we don't have a lot of earnings. Obviously, you're going to do a lot more time spreads in July and August than you are in September because it tends to tail off. But in May, alerted trades, 15 wins and 1 loss. 2,000 invested and netted 82.29. And in May, in the options room, we had 27 wins, 6 losses, quite a few more trades. 2,000 invested, netted 89.86, which you can see we didn't make too much more money in the room, and we had 33 trades versus 16 trades. So the alert service was really very, very effective in May. And here's June so far, up until a few days ago. We've had just 1 time spread. I did take a time spread on Nike overnight today, looking at Nike, and Nike needs to trade, for me to make profits in it, needs to trade between about $88 and $102 at the close when it opens tomorrow. All right, so these are the June trades, and again, percentages very consistent here. 17, 23, 9, 15, 21, 40 in the sub weekly ATM, 27, 33. June trades taken so far, 20 wins and 3 losses, 88% win rate. 2,000 invested, netted 57.46 so far. And on the alert trades, 12 and 1, 92% win rate, 66.64 actually netted more money than the actual room. But so this is June. So that's May and June, and there's your time spreads. Now for the alert service, how long are those $2,000 trades? Typically, they're going to be either the shortest ones, obviously intraday. Some days I'll get in the morning and get out in the afternoon, but they'll typically be over in a few days. Sometimes we'll take them for a week or 2. Just depends on the price action in the market, but typically not longer than a couple of weeks. All right, so when you get a text for the alerts that you're going to get, you're going to have the stock symbol, you're going to have the option strike price, obviously, the expiration date on the option, and the price to pay for the option, which may say, $1 to $1.05 or 95 cents to $1, but it'll tell you what to pay for that option. And I would recommend sticking to that. If the stock moves up really fast, you don't really want to chase it. Wait for it to come back down. Keep the original order in there at the original price and see if you can get filled. Typically, I send out an alert to buy the stock, buy the option, and then I'll send a separate alert out to get out of the trade. That would be coming out later that day, or it might be even a few days later. I'm just looking at the price action and trying to get what I think is the best profits we can get out of the particular trade. So when you get an exit price, an alert for an exit price, I recommend you put it in as GTC or good till canceled. So if you're not in front of your computer in the morning or anytime during the day, and you've got that order working out there for the profit target, then if you're not there, you'll still get filled, and you can take that. You'll take the profits. All right. So again, how do we achieve the kind of results that we just had? You just saw what the results were. They're pretty dramatic. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. This is key. We're only taking trades that qualify at this level. Again, so we only take trades when both of these are in our favor. It's not exactly true. I'll take trades when the internals are neutral, but the institutions are in the trade. I don't have to have bullish or bearish market internals. As long as they're neutral, I'll take a trade as long as the institution's in there. But if they're both in our favor, that gives us even a bigger edge. And again, we're going to align the trades with the institutions in the market. And this is just kind of a blurb on how we do this, the institutional money flow, how important this is to being a successful trader. Being able to identify this is critical. And I've been doing this for a good long time. And that's how we're able to do this. So again, I'm looking at institutional money flow among some other technicals that I look at. So how do we identify the institutions you're in? It's just people asking me this a lot. And we do what's called a triple screen assessment. You can call this fractal, or you can call it multi-time frame. We look at 3 things. We look at the momentum over the current time frame and multiple time frames. We look at the trend over current time frames and multiple time frames. And we look at the money flow, or the money flow derivative we've got. And if the momentum is moving up, for example, it's bullish on multiple time frames and current time frames. The trend is moving up on multiple time frames and current time frames. The money flow is moving up on multiple time frames and current time frames. The likelihood of that stock being pushed by institutions is extremely high here, extremely high, well up into the 90s, 96, 97, 98%. That is an institution is moving this stock, because retail traders cannot do this. There's no way they can move these like this over multiple time frames. So that's what we're looking for, and that's what the compass system identifies for us. All right. Before I go on into some of the specific charts, I want to take time here because I know some folks are interested in learning about how to trade over earnings, what I call time spreads. It's a calendar spread, but this is the only kind of trade I trade over earnings. So let's go over how these work, so you can have this as a strategy to use the next time earnings comes out. Now you get earnings most every day, but you've got to have specific criteria, which I'll show you. So I call them time spreads, right? So this is our all time spreads trade from the beginning of the year. And again, we have about an 85% win rate. I've been doing this for a little over 2 years since I discovered this strategy, and tested it and put it into effect. So these are the wins we've had. You had 100% on HPQ. I have losers, of course, but here is all the time spreads right up through recent. Again, you can see they didn't have many in June because there wasn't many earnings. 32 wins and 5 losses, 86% win rate in time spreads. That's really good, and the time set percentages. We talked about the winning percentage and the other trades that we had, the normal puts and calls, etc. The time spreads typically do better. They produce higher percentages. You can see 84% in Ford, 52 in Akamai, HPQ 50%, 45% in AMAT, Sage 45%. So the percentages typically will be higher with time spreads than they are with standard type puts and calls. All right, so let's talk about time spreads. This is a strategy that I'm going to share with you. Again, I share it in the room. It's not something I share everywhere. It's the only strategy I use over earnings. It's a time spread on stocks reporting earnings. They have to be reporting either tonight or tomorrow morning. When you put the trade on, like I put a trade on Nike today, they report it after earnings tonight. If they report it after earnings tonight or tomorrow morning, I can take the time spread, but it's got to be just prior to earnings coming out. All right. It's meant to capture the difference of the implied volatility crush and the time decay between this week's and next week's options. This is how this makes money. All right, and we'll talk about what that IV crush is, but this is how it's making money. It's capturing differences between this week's implied volatility and next week's implied volatility, and also the acceleration in time decay this week versus next week's time decay. Again, it works best on stocks that historically don't exceed their expected move after earnings release, so harvesting the premiums from the options can be profitable. What this means is, if the market makers have expected a stock to move 15% on earnings, you want it to move less than 15%. It doesn't make any difference if it moves 10% up or 10% down. As long as it trades inside of that expected move, then we're going to be able to make money, because the market makers have the options priced at what they think the expected move will be. And there are a lot of stocks that historically very rarely even beat not the earnings expectation, but the actual move that the stock makes. Remember, we're not talking about what the earnings are. We're talking about what the price movement is on the stock. So that it works best on stocks that historically don't exceed the expected move after the earnings release. You enter the time spreads for a debit, and that's the total risk on the trade. In other words, when you take a debit on a time spread, which I'll show you how it's structured, that's the most you can lose on that. We took a time spread tonight on Nike. We paid $35 a contract. That's our maximum loss, is $35 a contract. Can't lose any more. Again, time spreads, again, are initiated on stocks reporting earnings tonight or tomorrow morning before the open, and consists of, this is what the strategy is: sell this week's expiration at the money calls. I use calls, you can use puts, but I sell this week's expiration at the money calls and buy next week's calls using the same strike. This is going to be for a debit. So if I used a Nike, I used like a Nike 94 today. I sold this week's $94 calls and bought next week's $94 calls. Okay, I'm selling this week's calls. Understand that. This is how you make money in a time spread, by selling this week's calls, because you're trying to capture the volatility crush that's coming in the morning. And you do that by selling this week's volatility and buying next week's volatility. So after the earnings are released, the implied volatility is going to be drained or be crushed from both this week's and next week's options. However, the implied volatility is higher for the current week's options versus next week's, giving us the profit, because obviously the earnings are much closer to Nike's implied volatility for tonight is going to be a lot higher than it is for next Friday. And we're trying to capture the difference between that. That's how this works. And the reason that works is because of this crush. So let me talk about that in a second. And again, this will allow us to buy back this week's option and sell next week's option for a profit of about 15 to 50%. This is normally a 15 to 50%, usually 30 to 50%. And you do it as one trade. So you enter the trade by selling this week's call and buying next week's call. You exit the trade by buying this week's call and selling next week's call. A pretty simple calendar spread, basically. All right, so what is the volatility crush? Let's understand how we're capturing this money. What is creating this profit for us? The volatility crush, it's the additional premium included in the options prior to earnings due to the uncertainty of the stock price's reaction to the earnings report. The market makers are going to jack up the premiums on the puts and the calls because they don't know two things. They don't know which way the stock's going to go, and they don't know how far it's going to go. So they have to increase the volatility on the options, and they do that by raising the option strike prices. So we're selling a higher strike price not a higher strike price. We're selling a higher volatility this week than is in next week's. So that's what the implied volatility crushes. That's how we're making money, and this is what the market makers do. Immediately after earnings are released, the additional volatility that was included in the option premium drops or is crushed. Okay, the earnings comes out. Now the market makers know which way the stock's going to go and about how far it's going to go. So they immediately start pulling a premium out of those options. They drop in price. And remember, we sold this week's. So if they drop in price, we can buy it back cheaper. And that is the whole key. As long as the stock hasn't exceeded what the expected move was, we can buy back this week's calls that we sold for a lot cheaper than we sold them for, giving us a profit as far as implied volatility is concerned. And if you select the stocks that have a specific criteria just prior to earnings, the volatility crush can be captured in nice profits. And I'll go over the criteria. That's very important. This doesn't just work generally on any stock. You have to have specific criteria that you need to do this. But hopefully you understand this volatility crush, because this is what makes this trade so effective. And it also is really nice because you don't really care which way the stock goes. It's what's called a non-directional trade. But basically, when Nike reports, I don't care if it goes up 8 points or down 8 points. As long as it doesn't go up by 12 or 14 points, I'm in good shape tomorrow morning. So all the trades will be calendar spreads. Also, I call them time spreads, and because it's a specific calendar spread, we're only using this week's and next week's expiration. Now, the time spread is structured to capture the implied volatility drop after the earnings released and the difference between this week's volatility and next week's option volatility. That's what we're capturing. We're capturing the difference between those two volatilities. It also, by the way, captures the difference between this week's options time decay and next week's options time decay. If you think about options, the time decay on an option that expires tomorrow is a heck of a lot faster than the one that expires next Friday. So we're also capturing that implied volatility crush, and we're capturing the time decay difference between this week and next week. Those two things give us the ability to make a profit on these trades. And again, you enter the trade just prior to earnings release. Enter the trade in the afternoon before the earnings release occurs, after the close, or before the opening next morning. We've covered this quite a bit. And then we try to take 20 to 40, sometimes 50% in the morning. And we try to have the order working when the market opens, because you want to capture that volatility as soon as that volatility crush takes place. So most of our trades, a lot of our trades, will be closed out like at 9:31. As soon as the market opens, we'll close and take profits. So we put Nike on at 3 o'clock. Market opens at 9 o'clock. At 9:30 in the morning, we could be out of the trade by 9:31 with a profit if the conditions are correct. All right, so there you go. And this is the time spread criteria. Must have weekly options, obviously. We're buying this week's and selling this week's and buying next week's. We have to have weekly options. The stock has earnings announced after today's market close. If we're buying to tomorrow's market open, the implied volatility difference between this week's options and next week's options has to be a large percentage of 40% or more. Again, I have to look at the implied volatility and determine what the difference is between this week's. If this week's implied volatility is 180 and next week's is 80, I get a 100 difference. That's a big volatility. It's more than a 50%. That's large. That's what we're looking for. And again, historically, the stock should move less than the expected move at least 80% of the time or more. In other words, I don't want this stock moving outside the expected range more than 20% of the time. Again, we enter the trade in the afternoon prior or tonight or tomorrow morning's earnings release, and we close the trade for profit after the market open if possible. Okay, so and there is some adjustments we can do if it doesn't work for us. I won't get into that tonight, but there is some adjustments in this. But all of these go out on the alert service when I'm doing time spreads. Time spreads go out on the alert service, and we do a lot of them. As we get into July, we'll be doing a lot. All right, so that's time spreads. I hope you found that interesting. If you're in my room or in the alert service, I have a video on all of the strategies I use, but specifically time spreads that we talked about. I have about a half-an-hour video on how those are structured and how you make money on them. So here's the compass system. I just want to go over some charts quickly so you can see the compass system. This is a Tesla setup that we took. As you can see, Tesla is all green here. Institutions are buying. This is a 5-minute chart. You can see the compass system. The compass system has a few things on it. It has these pink arrows, which are pop out of the box symbols that we call pop symbols. This tells us when a stock's breaking out of compression. We took this trade right here as it popped up and went across above the 15 EMA. This is a 15 EMA, this little green line. That's a main trend line. And you can see the stock just marched up and started to get out right here. So that's Tesla, and that's what the compass system looks like. This is Gilead. I was using these charts to show Fibonacci reversals. We use Fibonacci candles to find a reversal. You can see it right here. This is where we get in. Took the trade off of that pop right there. Again, see pop out of the box symbol. GE, nice trade here. Again, moving sideways, and then we get this is a Fibonacci reversal. I have a video on Fibonacci reversals. I'm not going to get into them in detail here, but just know that when you go from a stock with a wick and a tail to a flat bottom, that's a Fibonacci reversal candle, and it makes for a really good entry for a long. All right, so I'm going to show some of the charts of the trades we've done recently on the compass system, so you can kind of see how we find these. This is one we just took a couple days ago, SMR. SMR, we were in this trade for 2 days. This is a daily chart in SMR. Notice that it's in compression. This is, by the way, another thing the compass system produces, this dynamic compression zone, the shaded area. But see how it popped out of the dynamic compression zone right there? And this is where we took the trade long. Everything was green. We knew institutions were buying it. We took it right here, and we get out here and here. And we got out. Paid $250 for the option, and after the second trade, we get out for that $250 went to $410, which is a pretty large profit, 64% profit in 2 days. Now this is the daily chart. Now here's where we get into the trade on the 5-minute chart. Here's the daily chart. Remember, I told you the daily chart needs to be bullish. Here's the 5-minute chart on SMR. This is where we were looking to get into this trade. Where do we want to get into it? Well, you can see this VWAP right here, the volume weighted average price on the 5-minute, the pink line. I want to get in as it breaks through that, which it did right here on a pop out of the box symbol. The candles went to green and blue. Everything was bullish right here. So we get in right here. So this is where we took the trade entry that day. Now we didn't get out for 2 days, but this is where we get in because we wanted to enter on a good bullish daily setup, which is what we did with that. All right. This was workday. This was another nice one we had. You can see the compass system telling us the stock is bullish. Went back to bearish. We had to be a little cautious here, although the current time frame was still giving us the current time frame momentum was still staying bullish. So I didn't get out because this was still bullish, even though this was chopping around. And we got in here and we had this. We were on this for 5 days, this workday, and it moved up beautifully. And everything, of course, this stayed blue or green the whole way. MDT, we took 25% profit on this swing trade right here. This is where we get in. Again, you see how it went from yellow to blue, current time frame, everything else was green. We knew the institutions were buying this. We were just looking for a decent level to get in for a break, which we did right here. The pink line, it does not matter on a daily chart. This is a daily chart. The VWAP doesn't matter. Popped right here off of this 15 EMA and marched right up. And again, we took a 25% profit on MDT. And again, you can see here, the compass system is telling us that the institutions are in here. Here's VKTX, 30% profit in 3 days. Everything green, institutions are buying. Popped up strongly here. We bought it here. We get out here. It didn't really move up that much, but we still made 30% on the options. This was a nice trade in McDonald's. Overnight trade. We're in for 8:30, out for 11:30 overnight. $3 a contract, 37% gain. Notice everything's green. We know the institutions are buying, but notice even though they were buying, we got a lot of compression. I'm not really want to get into the trade on a compression. I want it to break compression. Here's where it broke compression, right out of this dynamic compression zone. Pop out of the box symbol, get out here, held it overnight, get out here. And again, a 37% gain overnight on that particular trade at McDonald's. Moderna, a nice 33% gain. Again, see how red and yellow everything is. Institutions are selling this. You know, really, it's a simple thing to see when they're selling, when it's all colored the same like that. So we just took it here, took a 33% profit in Moderna. Amazon at 32% profit. This was just an intraday trade. We took it on this candle right here. As the stock compressed, everything went green except for the long-term momentum, long-term trend. But I was much more comfortable was very comfortable taking the trade with multiple time frame and current time frame green across the board here. So we took the trade right there, popped up 32%, just a day trade. JD, another day trade. We caught it on this breakdown of this dynamic compression zone. This went from green to yellow. Everything else was red. We knew the institutions were selling it. We went ahead and took the trade, and we get out before the end of the day for a 61% profit. That was a very nice profit on JD. Dollar Tree, 25%. Again, you can see institutions selling. Price action kind of going sideways. You wait for the break, which is where we took it right here. Break out of compression, 25% profit on Dollar Tree. And Datadog, same thing. So you can see these over and over again. The compass system is telling us that the institutions are in there. We're going to go ahead and trade it. I'm not touching it when I'm getting lots of different colors, but when I start to get red and blue, red and green together, blue and green together, I'm going to take it. CrowdStrike right here, nice profit here on this one, 20% profit. Again, this was chopping around. We went blue right here on this candle, so I took it and I had blue down here in the current time frame, so I was happy taking it. Didn't have a problem with this yellow. I had to watch it, but it was still okay. And then went back to blue again, but we were only in it for a short time. Amazon, 32%. This is a 5-minute chart, moving sideways, going green, yellow, green, yellow. Now we go green. Everything is green. Pop out of the box, coming off the 15. Buy the options right here. 32% profit in 45 minutes. Just move it right up. Beautiful trade. ENPH, another beautiful 20% in 1 hour, as this thing just dropped on a 5-minute chart. Again, notice we're below the VWAP. We've got compression. The institutions are selling. We've got the pop out of the box symbol. We take it short, and down it goes. And Verizon, this was the one I like to show because this is kind of shows you what the power of a low price stock. Verizon has fairly low priced options. We went out into the next week's in the money options and we paid 45 cents for the in the money options for Verizon because it doesn't move a lot. But we get in at 45 cents and look at this nice drop below the VWAP with the pop out of the box symbol. We were in this for 1 hour and we get out for $67 a contract. So if you put 10 contracts on, $450 turned into $670 in 1 hour. Pretty nice. And this, I just wanted to show the SPY super system, what we look for. This is a case where I'm only trading on a 5-minute chart when the institutions are selling, which you can see they are right here. And I'm breaking compression. I'm getting a pop out of the box symbol and everything's lined up bearishly coming off of the 15 EMA. That would be a support level or a resistance level. We bought it right here, and again, this was what you do. You just trade it to the downside to take puts. As soon as it starts to get some movement to the upside, you take your profits. You overstay your welcome on these kind of trades. So that's the SPY super system. Netflix, this is another one, 20% profit again. 5-minute chart. Notice the VWAP. Notice the price dropping below the VWAP. Notice the institutions of selling. We went from blue to yellow. They're in here selling. We took this 20% profit right here, and that probably about an hour. And Tesla, this was another nice 30% profit in this one. As the stock compresses along this 15 EMA, we bought it here as we got a pop out of the box symbol, wrote it down, and it fell pretty hard into the close for 30% profit. Notice everything here, yellow and red all the way across. You can see institutions are selling. It's not hard to see that they're selling it. And this was an overnight. We took Tesla overnight. Again, we had a pop out of the box symbol in the 5-minute chart at the end of the day. It was below the VWAP. Everything had just gone to red or yellow. And that told me that it was bearish, so we took a chance in taking an overnight, and we fortunately got a gap down on this one. I went from 120 to 112. Puts exploded, about $750 a contract in those particular options. All right. So, and this is just Tesla. I already showed this one just to kind of show you the compass system. So hopefully that gives a fairly clear view of the compass system. This is QSR. I just showed this to show why the daily chart and 5-minute chart is so important. This is QSR on a daily right here. All right, you see how it's coming up. Everything went to yellow to blue. Everything was blue and green. I know I want to trade this thing long, but where do I want to get in? So on a 5-minute chart, I'm watching this stock, and it's coming right along this 15 EMA, getting some color changes, and then I finally go to blue here, and it pops up over this 15 EMA, and I ride it up for a good long time. All right, so this was a nice trade on QSR, but you can see with this 5-minute how this 5-minute candle is working. Again, guiding us into this trade, so we only getting in when the institutions are in the trade. Really, really important. I can't emphasize enough how important it is to trade with the institutions. We're not going to ever take any money from the institutions. We're taking from other retail traders who don't know what we know, and they don't have the indicators that we've got. All right, so again, here's just a recap. This is what we do in the room. We do straight calls and puts. We'll do debit spreads using weekly options, time spreads, which we talked quite a bit about here tonight. I hope you found that interesting and helpful. It's a really, really good strategy. And then we'll use weekly ATMs and then credit spreads in the SPY super system. But this is most of our trades are going to fall in here. Straight puts and calls and time spreads during earnings season. Those are the majority of the trades. All right, and there's the alert service again to show you what it looks like. And I'm going to show you what the offers are that we've got. Got some nice ones here. They've done a really nice job on this. This is the alert service for a year, $7.98. For a quarter, $2.96. That comes with 1 month in my live trading room. So you can come and go as you want in and out of the trading room. We also have a Discord chat room with the two other additional professional traders in there where they answer questions. They have an audio feed that you can talk on and listen. Obviously, you get the alerts with it. And then I have about 30 videos right now on training videos for the compass indicators and how to use them. It's really not that complicated. It's really pretty simple, but those videos will explain this in more detail. Right, so that's the alert service. Now, if you want to go in the trading room, this is interesting, right? This is $7.98. For $11.98, you get the trading room, and that includes the alert service. So you get the alert service and the trading room. So if you're not in the room, you're still going to get the alerts. You can come and go into the room if you want to. That's $11.98 for the room. For $148, if you want to try it for a month, not something I really recommend because I don't think it gives you enough exposure to really make a judgment. But again, you're going to have a live trading room for a year if you take that. You get the Discord, you'll get the text, and you'll get the alerts, obviously, and you'll get all the videos. All right, so that's a pretty good deal. And then we have the Compass trading system. This is if you're interested in the software that goes on. It's on my Thinkorswim platform. You can get it on Thinkorswim, or you can get it on Ninja. But again, the Compass trading system, you go in, you get a month free in the room. You buy the software for a year. You get the Discord, you get the alerts, You get the all the videos, and it'll be you get multiple scanners, and it'll be installed on your machine by Brightline. They'll take over your machine, install it, and it'll look like exactly like my cost platform. It looks exactly like the Compass system I've got. It also includes all the scanners that I've got. Right, so that's a pretty nice deal. Now, this is the one that is they added new here for the video here for the webinar today, and this is really a no-brainer. If you buy the live trading room, 1 year in the trading room, you get the trading room, you get the alerts, you get all of the access to the Discord room as well as the videos. But if you buy it today, well, by Sunday, you're also going to get the Compass system software for free. All right, they're going to give you the Compass system, which we just looked at back here for $12.49. They're going to throw that in for just $11.98. So you're going to get the Compass system for free for this particular deal. This is really a no-brainer. You know, you buy one get one free. This is kind of unheard of to actually give the software out for a year when you buy the room for a year. But that way, you know, if you've got the software to use, and you don't, if you're not in the room, you can look at all the stocks you're interested in on the Compass system on your own trading platform. So this is probably the best thing you'll ever see. This is really a great deal. Again, you get my entire workspace included free on the machine. The text at Brightline will put it on. Now it's important to understand, if you have the Compass system on like Thinkorswim like I do, I don't trade off of Thinkorswim. I just use that to give me the indicators that I need to pick the stocks that I want to use. But I don't trade on Thinkorswim. I actually trade off of Tradier using TradeHawk as a front end. But you can trade off of anything. You can trade off of any particular platform you want, but you would use the Compass system off, in this particular case, on Thinkorswim to get your indicators and find out which stocks you want to trade. Then you just trade them off of the room that you're comfortable trading in. That's what I do. All right, so that's the best deal I think I've ever seen that Brightline does. They'll throw the actual Compass software in for free if you take a year's subscription to the room, and that will include a year's worth of alert services as well. All right, so that's about all I have to say. Let's see, any questions? Can the alert service be used with some other brokers like TradeStation or Interactive Brokers? Yeah, listen, you can use the alert services just identifying the stocks to trade. It's not gonna. It doesn't say anything. It doesn't say anything about how to trade. Like I said, I don't trade on Thinkorswim. I'm just finding the stocks. If you find a stock to trade, you can trade it with whatever platform you're comfortable with. Let's see here. Got a few questions I didn't see here. All right, how long are the trades? We talked about that. What percentage of my trades are at the money naked puts? Well, if you're talking about selling puts by themselves with without a spread, I don't do anything. I don't do naked puts in the room or naked calls. I would never do a naked call. And I don't do naked puts. You should only be doing naked puts. In other words, selling puts without a spread. You should only be doing that if you want to own the stock at the strike price that you're selling the puts at. How do I gauge the historic probability the actual move won't exceed the expected move? I've got a service that I use that a friend of mine has, where I look at it to come up with that. There's probably other programs out there that do that, but I have one that I use that a friend of mine has that he lets me use that tells me how often it beats. Like I know NVIDIA exceeds the range 27% of the time tonight, which is a little more than I'm comfortable with. I'd rather have it beat less than that, but the implied volatility difference was big enough to make the trade justifiable in my mind. Can the alert service be used with some other brokers? I just said, yeah, you can trade it with TradeStation, Interactive Brokers. You can trade it with anybody you want. Again, all we're doing is telling you the stocks to trade. Where you trade the stocks is up to you. You trade them on your own platform. I mean, I use the Compass system on Thinkorswim, but I'm not trading on Thinkorswim. I'm just using the Compass system on there to give me the indications and the indicators that I need to find the trades that I want to take. Is it Compass trading system for life for a year? It's a year. It comes annually. It's an annual license on it. Okay, I think that's all the questions. Thanks very much. There was a lot of questions. I appreciate that. I hope you understand. Again, you don't have to trade on Thinkorswim just because you get the compass system on there. You'll get the alerts, or you can look at the compass system. You'll come up with a trade that you want to take, that you like, that's high probability. Trade it wherever you want. You know, you can trade it on Tastyworks, you can trade it on Fidelity, you can trade it on Scott, you can trade it on Interactive Brokers. I trade it on Tradier. You can trade it off of any platform that you want to trade it off of. Can the indicators be accessed on TradingView? No, I don't think TradingView lets you do that. Like, I use TC2000 for a scanner as well, but the compass system only goes on TOS or on Ninja. It doesn't go on anything else. And like TC2000 is very hesitant to have anybody put anything specialized out there. And I don't know about TradingView. I've used TradingView before, but I prefer TC2000 for my technical analysis to do that. But it's not going to go on TradingView. All right, everybody. Well, listen, thanks so much. I appreciate everybody being here for the webinar. I appreciate you taking your time on this Thursday afternoon to listen. I hope the information I gave on time spreads you'll find useful and use that strategy. Again, if you come into the room or the alert service, I have a whole video on that. Or you'll basically get a copy of this video as well, this presentation, and you can go back over the information I produced here today or showed you today in there. So again, that's the best deal I've seen. It's the best deal I can tell you about. I don't know. It's really pretty amazing. $11.98 for the room, which I told you made $60,000 last year if you put 2,000 into a trade. Now, not everybody does that, obviously, but you can extrapolate that down. If you put 1,000 into a trade, it would have been 30,000. That's quite a return on $11.98. So anyway, everybody have a great evening. Thanks so much for being here. Very much appreciated. If you go into the chat box, by the way, Rory has the links in there, I think. Yep, Lori's got the links in there for all of the things that we talked about right here. And if you're interested, you can click on that. You can certainly give him a call. And I look forward to seeing some folks in the room and on the alert service pretty soon. So everybody have a great evening. Enjoy yourself. Friday coming up tomorrow and holiday next week. So we'll be active every day. By the way, I trade in my room every day from market open to market close. I get in about 9:15, open the room, and then I stay till market close every single day. So it's can't be trading all day. I'm looking for things all day, but I'm on there answering questions, etc. all day long. Some of the folks in the room can ask me for a stock. We'll post it up there. We'll talk about it. Go over all the technicals on it, why it's good, why it's bad, etc. I get a lot of good trades from the PIP members in the room who are also looking on the compass system. So, all right, everybody, have a great afternoon, great evening, and I look forward to seeing some folks in the room.